Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are on Friday, November 10th. We're going to take a look at Chargepoint. So I had a few folks write to me and say, can you update Chargepoint? So that we'd come in, take a quick look at the chart. I cleaned it up a bunch, and we'll start here. We'll go to Think or Swim, call it a video. So most important thing for Chargepoint as it continues to sell off well past earnings is this downtrend resistance that developed really like right after earnings. So you see it's tested this, about half a dozen times now, and every time it's been pushing off. Now, I don't know if the next time will be any difference, and that next time could be really soon, but we'll just have to sort of wait and see. Now, that's one key component. To me, that's the most important thing. Breaking this downtrend resistance and then getting some distance from it is the critical component. If there's going to be any hope for trend reversal, in the near future or in the far future, it doesn't matter. This downtrend resistance needs to go. So aside from that, there's just basically two zones that I put in. A zone here that goes from about 253 down to about 238. And in that zone, I would want buyers to continue to show up and show up sort of more vigorously, meaning not only with higher volume, but also at a higher price point. So in other words, if it dips into it and buyers show up pretty strong at like 243, and it tries to move up and then it comes back down again, I'd want buyers to show up really strong at 248, right? Something like that. So my worry here would be just in general, if it continues to dip into this zone with no real payoff, right? It just keeps kind of retracing, reverting back into the zone, expecting buyers to come show up. My worry is what I talk about all the time is going to the well too many times and then it's dry, meaning come into the zone, keep looking for buyers to show up, and they do, and they do, and they do, and then they don't. And when they don't, it can be quite a catastrophic hole that's left there. Buyers are just not there anymore, so where are they, right? Then the price has to just start plummeting and try to find the place where the buyers are showing up. But who knows exactly where that is. So that would be my only concern, depending on how many times it dips into this zone and the buyers do show up. I would just be aware how, like, what the frequency of that looks like and how exactly the buyers are showing up in that zone. Okay, that was much more long-winded than I thought it was going to be. On the other end of the spectrum, we have the selling pressure. So these are pretty tight in. I would look for the selling pressure to last from basically $3 up until about 328. Okay, so pretty big zone there percentage-wise. But it's just sort of the case based on the last couple of swings. And again, if the bulls can continue to put pressure in that zone, I feel pretty confidently that there's going to be quite a few sellers in that range. But if the bulls continue to put pressure on them, again, eventually people who are trying to sell in that zone are going to exhaust, and you might have some smooth sailing through that range, and then it might become very strong support, where that then is the space where buyers are showing up. And we can turn that green. Put something up here red. So to me, that's sort of like what recovery looks like for Chargepoint. Do something, even if it's going sideways, to get out from under this downtrend resistance and get immediate distance from it. Again, even if that's sideways distance. My worry is that it pushes up, hits resistance here, and then starts to curl right back down, and then it comes back into here, and we're just right next to the downtrend resistance again. We see it all too often with these long distressed stocks. So that's my key thing. Break the downtrend resistance, get some distance from it. Buyers need to keep showing up strong and more vigorously at higher price points within this green zone. and they need to keep putting pressure on sellers in the red zone. That's sort of my formula, or what I would look for to feel like there's any confidence in trend reversal, stabilizing the price, that sort of thing. Now, on the Thinkorswim study, this baby, after earnings, spent a lot of time outside the lower bound of the channel, like a shocking amount of time outside the lower bound of the channel before it ever came in and retested the mid-range. Here it sort of had a near miss, but I mean, this is just an incredible drawdown. Spent time out of the channel from about 629 or so all the way down to 238. I mean, just tremendous peeling off of price and percentage loss there. Now, for what it's worth, this entire time it didn't have the bullish oomph to even get a test of the mid-range of the channel, and it just got that a few days ago, right? It wicked through it on here, tried to put a body on it here, couldn't hold it. That's fine. But the question is, now that it was able to touch it, what does this drawdown look like? Can it not pop back out the bottom bound of the channel, and can it at least hold mid to bottom channel and then put pressure on the mid-range again? It's a similar idea, though different, because here we're talking about a zone that doesn't move, right? That's just a fixed zone, whereas the mid-range of this channel moves when a candle gets put in. So the question here is, just based on where that is and that moving targets, is it able to come back and continue to put pressure on the mid-range of that channel, and does it start to be able to push through a little further in different periods of time until eventually it can establish support over it, and then it can maybe even attempt a run toward the upper bound of the channel, something like that. We do also see on this sort of double wave, it's going to be much more than that, but several waves of bearish pressure, right? Really strong bearish pressure. And even this most recent wave was not quite as strong, but darn close to the strongest wave back here. But it's getting close to dying down. It's getting much closer to dying down than it ever did in through here. And so again, the question becomes, you had a recent test of the mid-range. You have bearish momentum dying down more than it has in recent past. Is there something that could take shape here? Maybe, but to me, it has a lot to prove, because it's been under such distress for so long. Even before this recent drawdown, right? It's a long time, and it's a huge percentage losses. So to me, it has a lot. It's going to take that much more for it to prove in any convincing fashion to me that there's an opportunity for trend neutralization and then trend reversal. So we'll see. But those are the couple of things that I'm looking for that could be leaning in that direction. But it's going to take more than that for sure. All right, folks, I hope that you had a good trading week. And as always, I appreciate you watching, and I will see you in the next video.